This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
What I'm going to do is I'm going to show you how to trade gold on a daily basis, how to look at gold, and how to basically identify trades. Meanwhile, how to get this little entries, little stop losses, so you minimize your risk while growing your reward on gold.
Rightio, folks, here we are on Trading Out. We've got Khaled in the house. We've just done a wicked podcast. Go and check it out. There was a link below this video. But now he's going to talk you through how he actually trades gold. And this guy is a seven-figure trader. He's been doing it for 8 years. You're going to see a bit of proof of what he's done to start off with, and then jump into a chart. And he's going to show you what he does on a daily basis, like fully transparent. So welcome back, Khaled.
Thank you. Thank you. Thank you for the podcast. You're a killing host, man.
Well, thank you, mate. Let's dive into your chart and have a look at things.
Yeah.
Our sponsor, Blue Guardian, is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Let me first just show you like my 22 performance. Good. It was mainly gold. I always trade gold. I only trade gold. Bitcoin, if Bitcoin is moving properly from particular key levels, particular prices, it's a sort of investment. I don't trade it. I hold the trade for a long time. Good. So it was actually a couple trades that pushed the account up. One of them was Bitcoin. So initially it was a $25,000 investment. I made around roughly 160 grand. Good. I made almost 34% of that on a couple Bitcoin sales and gold buys back then. Good. So now let me drive you through my chart. What I'm gonna do is I'm gonna show you how to trade gold on a daily basis, how to look at gold, and how to basically identify trades. And meanwhile, how to get these little entries, little stop losses, so you minimize your risk while growing your reward on gold. So what I always like to do, let me delete everything. What I always like to do, if let's say it's a new week, good. I always like to start with my weekly. Good. It's similar to top-down analysis. Good. So it's just like for us to know, okay, what's happening on a weekly level, So at first, gold is definitely uptrending over that next few thousand years in the future. But the actual fact why we check the weekly is not like to see the whole trend. No, at all. It's for us to see how the previous weekly closed, so we can build our assumptions and our scenarios for the new weekly based on that. Good. So in this instance, you can pretty much see, if you look to the left, the liquidity from this side, that was your supply, which flipped into demand, then came back over here, got test, but still, pushed to the up from this demand to this supply, which was previously a demand, right? Then prices squeezed down. Good. But meanwhile, if you go back to the left too, over here, you can see that this whole region is a liquid region too. Good. So if you look at the daily time frame, you can see it over here, that this region is a liquid region, and there is, in fact, it's a demand on a daily time frame. And if it's a demand on a daily time frame can indeed influence a weekly time frame. Good. A daily time frame can indeed influence a daily time frame. A forex time frame cannot influence a weekly time frame the way the daily time frame, influence the daily time frame. Good. So coming back to our weekly. So you can see pretty much this. Let me delete everything again on the weekly. So coming back to the weekly time frame, you can indeed see what? Can indeed study the behavior of this candle over here, right? Can indeed study the behavior of this candle over here. So you had this lower wick coming from the downside to the upside, which is representing buying pressure, and the candle closing what? Closing bullish, right? We can even look at the higher wick, which represents what? The selling pressure side, which can be expected due to these wicks over here, due to the sensitivity in this region. Good. So that's a clear representation that the next weekly candle is going to push to the upside. That's something we know for a fact that, okay, there is going to be a push to the upside. Okay, when is the push going to happen? How is the push going to happen? That's something we don't know yet. That's something we can't know from the weekly time frame. That's something we can get from the lower time frame, like the daily. Good. And that's where our daily journey basically starts. Good. So coming to the daily, you can see our demand over here. And boom, that's Thursday, Wednesday, Friday. That's our Monday, right? So that's where the Monday basically opened. That's where Monday opened. So looking at Monday, look at how Friday closed. Closed bullish, right? Closed bullish. But at the same time, we have what? We have sensitivity. We had a supply to the lift. You can look, extend it, see where it came from. Always look at the lift. There is always a region for it. You can always extend it back to get more confidence in that region. You know, because if you look at it on a macro level, on a daily level, let's say, on a daily time frame now, it might not just show you the influence, but if you clearly study the pair you trade and you look at it and you identify properly the sensitivity regions you have, the 1 minute time frame is going to shock you, or the hourly time frame is going to shock you too on the movements that's happening. Good. So now we need to replace the weekly with a what? With a 4H time frame. So we get more details, right? So we get more details on what's up. Yeah. So we say Monday, that's Monday. That's where basically Monday opened. All right, that's market open Monday. Good. So looking at Monday, can just see pure market behavior. Over here, some basics. You have what? You have a supply, right? Which was like support, resistance, supply, demand. You know, for me, it's the same. You have what? You have a demand flipped into supply. So what's the 101 of this? What's the 101 of this? After observations, after market test, after data, collecting all of these data, what's the 101 of these? If market approaches supply, there's going to be a rejection. That's it. 80% of the time, there's going to be a rejection. That's something we all agree on, right? Now the part comes how to basically take advantage of this, right? How to basically take advantage of this. Where is the possibility that the market is going to stop and shift, right? Stop and shift, because we said on a weekly time frame that there is going to be a push to the upside for sure. But we don't know where, when, and how. We need to identify that on a lower time frame. So, and that's where we utilize this liquidity over here, this demand over here. Already identify this as what? As a demand for us, right? As a demand for us. Let's delete this. Now we need to replace the daily with an hourly. So notice something. the higher you are, the less the details you have about the chart. Like when we start from the weekly, we almost had nothing about this. We almost literally had nothing about this. On the daily, it showed us a solid demand, right? On the 4H now, if you zoom in, you can see more details about the demand that we actually like. It wasn't even showing on the weekly time frame. Right. So now even this demand over here, this liquidity box over here, it had a supply on top, and that supply flipped into demand over here, right? So if you want to compare it to the hourly, if you want to literally compare it to the hourly, now you have more details on the hourly about that demand, right? You literally have more details about it over here. Does that make sense?
Yeah, and I see. Do you primarily use Wicks as your sort of demand areas on these timeframes?
Not necessarily to. It's regions too. If so, the main idea is looking at the recent moves, looking at what's recent, and looking for the origin of the recency. Where is the origin coming from? And was the origin a shift point or not? Was the origin a sensitive point in the market for the price, or was it just like a random move? Right? So if we look at this wick over here, that's clearly coming from where? It's clearly coming from here, right? We can literally go with it one by one. So it's literally coming from this demand over here. You get pushed up, came back to the demand over here, broke down, flipped into supply, pushed down, right? Came back up, supply, down. Again, supply, down. Now it reached to a point where you had literally the most recent supply over here that pushed down, and then the price broke down and liquidated over here, right? So it's not necessarily to be a wave. It can be just a body too. It can be like the end of the body. Like it can be a candle without even a wave too. But most candles, actually a huge portion, up to 95% of candles do have wicks. All right. So and a wick is a clear indication for what? For liquidity too. Shows you that, okay, there is liquidity or not. Good. And I feel more confident when I have more wicks in my area, in my region. Good. Because the more the wicks, the more the liquid that region is, in fact. Good. So that's basically where the market opened on Monday. That's basically where the market opened on Monday. You can see also on the hourly, the whole region, the most recent region. Good. So normally what I like to do, I'm not a person who puts sell or buy limits. I don't use limit orders. I like manual execution. Why? Because manual execution do indeed give me what? Give me a higher risk to reward ratio. Good. And a higher probability trade too, because you see the market as it's developing. Good. So in fact, I already took these trades though. I can send you a screenshot of the trade. I took these trades though. Okay. I took these sells and I took these buys too. Good.
Right, folks, I'm here at the Black Bull Markets headquarters up in Auckland, New Zealand, and I'm standing in front of their whiskey bar. Now, if you like that kind of selection, you're going to love their 26,000 tradable assets from Forex, cryptos, indices, stocks, you name it, they've got it. So, folks, go and check them out at blackbullmarkets.com or click the link under the video or in the card above.
So, what happened is Now the tricky part is, so me looking at this candle over here, if wanna understand, okay, what does this candle actually indicate? Well, what does it say? What does it say? Okay, there was a bullish pressure, right? There was a bullish momentum, bullish pressure. There was a bullish liquidity coming from this demand over here, but still the candle closed bearish, right? So that's, what does it say? There might be a bearish pressure going to the downside from there. So it all depends on what? It all depends on this candle, the next hourly candle, and how the next hourly candle might close, right? So now if we go to the 1 minute time frame, now, if we go to the 1 minute time frame and look for that exact moment, this candle, it won't work.
It's all right, my guy can edit this stuff out. So, yeah,
Yeah. So I have this rule in my notebook, which is each hourly candle gives me one trade. Good. That's it. Each hourly candle gives me one trade. I never execute in the hourly candle if the hourly candle age is plus 45 minutes. The trade should be presented in the first 45 minutes. If it's 45 minutes, 30 seconds, I don't trade it. Wait till the next hourly candle. Good.
That's a great rule in itself, I think, for trading on the lower time frames. Because I don't know how many times I've been caught out at the end of an hour. And
you get lost.
You do. Okay, cool. Carry on, mate. Carry on.
No. Just to prove your point, this candle over here, this hourly candle, you can literally buy a candle and in the last 3 minutes, it just flips.
Yeah.
So now wait for it. Let it close. Trust me, let it close. You're going to get your trade the next candle. 100%. You're going to get your trade the next candle. Good? This is getting messy. Anyways, good. So what we say is, so this week can be explained, like literally every single move can be explained and through knowing why, from where, the region of it, right? So it closed bearish, still you can see liquidity to the downside coming from this minor demand, right? But at the same time, now is when you include confluences too. Now we include the trend confluences too, like the way the market behaves too, right? So you had a bullish push to the upside. So you had a wave to the upside. You have a bullish wave to the upside, first of all, good. And then you had a structure point. You have this supply, right? You have this supply. So for a fact, you know that there is a correction. There is going to be a correction. It's not for a fact, but for like you have a probability of 90%, 80% that you're going to get a correction from there. Right? The market doesn't just move all the way up like this. It just doesn't make sense, You can't just drive from Berlin all the way to London without going to your gas, like stopping by gas stations, filling the fuel, oil, etc. Right? You can always compare it to the same. So we know for a fact that's how we increase the confidence in the trade. That's how we increase the scale of the trade. That okay, this trade is an A+ settle. This trade is not just like I don't know a random trade. No. I'm going to execute it on the 1 minute time frame, but remember on the hourly, it's showing me that it's a bearish pressure. So that's the difference now. If you trade coming from the hourly and you executing it on the minute time frame, man, that's power by itself. That's power on its own. So let's keep moving now. Let's keep moving. So when we say we know for a fact what, that what's going to happen is that there is a potential for bearish pressure, right? But the only way for us to decide, is to wait the next candle to open, so we can understand, okay, what's happening. And that next candle happens to be what? Asian open, right? That next candle happens to be what? The candle of Asian open. So see now how you connect the dots between the confluence and the timing and the volume coming in the market. And till now, we didn't even look at the 1 minute time frame. Like, that's the last thing we're gonna look at it. Good. So the candle basically did what? Liquidated to the downside. The candle basically liquidated to the where? To the downside. Let's just draw a random line for the recent demand we have over here. The most recent demand we have over here, which is, if we go to the minute time frame, where is it? It's basically over here. That's the recent demand basically on the 1 minute time frame, right? So far, we're studying the behavior, we're collecting data from the hourly time frame and getting our 1 minute time frame ready for the execution and spotting the entry, right? Good. So candle closed now. Candle closed. All right. Oof. Now where we start looking at where? At basically the 1 minute time frame. So candle closed. That's where this candle basically closed, right? That's basically where this candle closed. So you got a new candle opened, this candle, you got the new candle opened around this area over here. And guess what? Remember what? Remember that recent demand we spoke about. The recent demand we spoke about. And notice now how this recent demand flipped into what? Into a supply. Right? Now what's lovely is when this got liquidated, by liquidated I mean it liquidated the orders in it. It squeezed it. It broke out of it. Good? It broke out of it. Good. So by the way, by now, you know that, okay, price is gonna go back to these levels over here. You don't neglect one single sensitivity region on the chart. It might be just the reason for the price to shift back up. It might be just a reason for price to shift back up, because it might be just the connection or the missing piece coming or kicking in with the volume time, like this candle, exactly like this example too. So don't neglect now one single price or sensitivity price on the chart. Good. So at the same time now, the same behavioral analysis we done on the hourly, we can do on the minute too, since we refined even our minute and got the data we want from the hourly on the minute. Good. So when this broke below, what we had is, you can see this candle over here, this wick, and those wicks. You know, over the years, I've trained my eyes to identify these things, you know. Now my brain, I identified like my eyes to identify these spots. It comes out of observation, you know, it comes out of like watching the charts on the lower time frame constantly. You develop that kind of skill. Good. So at the same time too, without even you having that skill, you know for a fact that, okay, this is our demand was, right? And flip down. Now you can see a confirmation of it. Again, a confirmation that it's a supply, right? So what I usually would do, actually, in fact, me myself, I would do is, good. So the candle closed, this candle closed, and this candle opened, right? This candle closed basically. No, sorry, wait, we messed up. This candle, this is where it opened, and this is basically where it closed.
I thought you got it one wrong. I was like, has he got it one wrong?
Yeah.
Okay. I'm glad you spotted it, because I think you're back on track now.
Yeah, no, we're back on track. Like, we messed up. I was like, there's something missing, you know, like, where is it? Yeah, this is where the Asian session opened. Good. The first candle of the Asian session opened. You can see it liquidated this demand. You can even look at the bigger scale too. You can see the prices, good, the liquidity of the prices, good, and how it liquidated the downside. All right, now perfect. Since we know for a fact that, okay, cool, this is my demand over here, good, this is my demand over here, I'll squeeze it to the other side, good, that's what I have now is my demand, right? And now it's supply. But watch out, we always need to focus on what? On the recent activity. So yeah, for a fact, this is our demand over here. This is what we got as a recent demand over here. But before you decide that this whole box is your whole new supply, no, focus on what? Focus on your recent activity. Keep your charts clean too. What's the recent activity? Is this. So since the candle closed over here, and this is our new candle, good, this is our new candle that we're going to sell. So what's the recent movement in here? Is this supply, right? Which is also coming from where? From this demand that we talked about. Make sense?
Yep, that makes sense. Yeah.
So from there, what you can do is, it's literally up to you whether you want to have a sell limit over here. You just sell. We'll be taking it to, as we said, never neglect any sensitivity regions. Never neglect actually any sensitivity regions. Good. Whether you want to take it all the way down, it's up to you. If you want to take a sell limit, it's up to you. Or if you want a confirmation that, okay, this is closed bearish, I'm going to sell. My stop is above here. That's where my target is. It's literally up to you. Good. So you're gonna hold through that. But that's the difference now. If you know your pair, if you study one pair, so if you just study one pair, so you know for a fact, okay, I got what? I have sensitivity over here, right? And I also have sensitivity over here too, right? Which might cause a minor changes over what? Over the short run. And that's literally when you start configuring the 1 minute time frame configurations with what? With your hourly. So literally on a daily basis, all what you're going to need is your hourly and your minute. Hourly time frame, 1 minute time frame. You're gonna keep moving with it. And same as if you put up in New York. So as if you put up in New York. So as I said, I have a 2 hours window between New York and, let's get the sessions, and London. So I put up on the charts 1 hour before New York opens and 1 hour after New York opens. And hopefully I'll be done with my trading day within these 2 hours. You know, because after that becomes frustration, boring, and the error gap or the margin error starts to increase too. The probability of you actually taking a loss start to increase because boredoms start kicking in, especially for a scalper. Good. But I'm not talking about a scalper that you actually scalping 5 pips, 6 pips. I'm talking about you utilizing the scalping techniques to get the hourly candle, you know, to eat a whole hourly candle or 2 hourly candles. Sometimes you can still use the same technique to eat a whole session or eat a whole daily candle and just forget about it. It's the same technique, different time frames.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
So same here too. If you want to look at New York session too. If you want to look at the New York session, we already had our demand from here. We already discussed it. We already explained where it came from and how strong it is and what's the confidence rate of it. Actually, for each price, I look at the market in prices, especially gold. Good, because even in the broker, I was a gold dealer. I look at each price and I rate each price. You know, I put like a rate on each price. This is like a 10 out of 10 price. This is a 9 out of 10 price. This is a 5-star price. You know, like this is a 10-star price. That's how I rate it based on the odds or the probability of having an impact on the market over the short run, over the long run. So you build a kind of a relationship between you and the price too at the same time. Figure what I'm saying? Good. So
yeah,
putting up in New York, we say 2 hours. Good. An hour before market starts. So in my own time zone, where am I at the moment? I'm in Jordan, Amman. It's the New York session opens at 4 p.m. my time. So I always had this between the 3 different countries I live in. I live in Germany, Jordan, and Dubai, UAE, Dubai. So in Germany, it's New York starts at 3 p.m. In Jordan, it starts at 4 p.m. In Dubai, it starts at 5 p.m. So I always had the same lifestyle around these hours. I always had it wherever I travel, these hours. Everyone in my life knows me that, okay, around these hours, this guy is not available. If you literally call me like I made an accident, I won't even reply to you. I'm not available. I'm not around. You know, my phone is flipped, it's silent, it's far away. I'm just on the chart, checking what's up. Good. So that's where basically it starts for me. That's the gap I'm talking about. An hour before, an hour after. Good. It's out of tested data too. You can go on and test it on yourself. Don't just take my words for granted. Go out and test everything anybody gives you. Good. And it's from here it gets simpler too. We discussed this demand. We discussed where it came from, right? The first validation. We always look for validations when you do things. The same like here we did with this sell too. The same validation over here. You got this wick. What does that mean? When a wick reaches a major shifting point on the chart and gives you a good wick, that means that, okay, this place is valid. This place is valid. There is orders. This place is valid. And we can get a push to the other side, from this particular area, sensitivity region, supply, demand. You can name it wherever you feel comfortable naming it. You can gamify it too. It's up to you. Good. So, and that's where we start being recent too. That's where we start being recent. So pushed up. Never forget your details. You have this demand, supply, which flipped in supply. And you can see that sensitivity over here in this wick, which is a representation for the recent behavior of this demand over here, which flipped into supply over here. So by this, what I mean, that's how you start anticipating these moves and knowing exactly that, okay, if I bought here, there is a huge chance that I'm going to be in a drawdown a little bit because I have sensitivity over here. I have a supply. I have a region. Let's look at it. Let's discuss it in a really basic way. Good. I have a place here where sellers are present. Simple. That's it. I have sellers in here. So just look at it that, okay, I have sellers in here and they might give me a better entry. There's going to be a pressure between the two sides, you know. That's how consolidations start. That's how consolidations are being constructed or gets constructed. It's where when the price gets squeezed between two levels, you have a supply from the upside, you have a demand from the downside, from the left. I'm not talking about the recent, I'm talking about the left. That's where they actually coming from. You can even look for a random example. You can look at it over here. So you have this demand, you have the supply. So that's where it built its own range. That's how they get constructed, you know. And once you understand how these ranges get constructed, you stop failing into these traps. You stop failing into these traps. Good. And especially you always remember what you're coming for. We're coming for a buy over here. We discussed it already. We knew already what's happening. We identify our 10 star plus demand over here and price. Most importantly, price. My 1910s, those 19 levels were all-time highs for almost more than 10 years. No, 8 years, sorry. And now we're looking at them like it's nothing, you know. You know what I'm saying? This is psychology out there for that. Good. So that's where you come, basically. That's basically where you come on the minute too. You always want to focus on your minute. And you start looking at your minute. So this is the recent demand. You get your recent demand over here. Good. And unfortunately, you didn't come over here. You pulled up over here. Right. So by the time you reanalyze your chart and you reconfigured your configurations on the chart, you would have missed this one over here. And you would have missed this one over here. So what you would have taken is either this one over here, or in fact, this one over here. My buy was this. That's where my buy was. Where I can show it to you if you want to.
Yeah, maybe. Yeah, send some screenshots through. We'll just overlay them on the thing here.
Yeah. I'm gonna send you the sell. I'm gonna send you the buy.
Yeah.
I'm gonna send you the sell and the buy. That's where I actually bought in, because that's exactly what happened. I pulled up over here, and I was like, yeah, it's gonna come down. You know, it's gonna come down to this over here, to this over here. So I was like, yeah, never mind. But then when it came down, I was holding my daughter, and I couldn't buy this one because it took me like 3 minutes to give her like the milk, blah blah blah. Couldn't do that. So when I pulled up back again, I was like, okay, it was already pushing up. I was like, that. So my best option would be is once it's breaking out of here and giving me building a recent demand on it, I'm gonna buy it. Or if it goes down to this box over here, I'm gonna just buy it. And that's what happened. It came back. I bought, dropped my stop over here, and took it. So that's how I approach the market. And that's why I say it's not a strategy, it's a systematic way of approaching the market. Because as I always say, the trades are always the same. They're the same guest, but in different outfits, literally. It's like you have the same guest visiting you over and over and over again, but every time you see that guest is in different outfit. He or she in a different outfit.
And can you remember where your exit was on that trade?
Yeah, definitely. Let me remove this. I didn't hold it all the way up. Over here. So that was roughly I was like almost 1-7. That was almost 1-7.
That's interesting. Exactly as you were saying on the show, you usually get 1-6, 1-7.
You know, do sometimes get like crazy trade, you know, like once a year. Last year, like that's what I'm saying. Last year on my track record, I had 1 to 200 trade.
Gosh.
Yeah, that was the first time in my life I get such a trade. You know, I literally had like what, like 3-4 pips of stop loss, and it was just for fun though. It was just like buttocks. You know, it was just like me. It was just me playing around. You know, it was like, yeah, I knew the trade. I'm executing the trade, but I was like, dude, wait, I've waited. What happened in that trade? That particular trade. See how life rewards you sometimes. So I was like, instead of me just like, okay, getting the first confirmation on the 1 minute time frame, I'm gonna wait for it the same way I wait for the hourly candles. You know, it's the same way I wait for my setup on the hourly and execute it on the 1 minute. I'm gonna do the same too. I'm already waiting the hourly to give me the setup, you know, to give me the banana, the peeled banana. So I'm gonna wait for the extra peeled banana on the 1 minute time frame. So my stop would have been 10 pips, 8 pips, and my stop was like 2 pips. It was literally 2 pips due to spread. No joke. It was literally 2 pips due to spread. That's where like, and it's just, I just got lucky too. Just got lucky. It was when gold dropped like almost 100 pips in a minute candle.
Oh, really? Oh,
yeah, just got lucky.
I'll hold it. Hey, look, thank you very much for sharing, mate. This was awesome. This was absolutely fantastic. I think that the folks that have picked up your podcast and filled it in the gaps with this this video display have been, you know, in for a real treat here, and it's definitely given me a more of an understanding of supply and demand, which I'd never really dove in far enough into to get a great feel for. But this has clarified it for me. So before we wrap up, what's the best way for the folks to get hold of you?
Twitter, Instagram. No, I'm planning on deactivating Instagram, Twitter, or Discord. You can reach me on Discord anytime. But it's my own firm Discord. So
cool. What we'll do is we'll put those links in your show notes, folks. There'll be a link under the video while you're clicking around down there. Click on that subscribe, like, and that notifications bell, and we'll see you in the next video.